Hello and welcome back to Underdog Investing. So today I want to talk about Lemonade, and more specifically, I want to firstly go through the stock price and some of the reasons why we've seen some changes in the stock price recently. And then I'd like to go through some really important tweets from Daniel Schreiber, the CEO, as well as Shai Winiger, the co-founder of Lemonade. And finally, I just want to finish off by reading some really interesting and positive things about Lemonade from an article from Motley Fool. Now, before I jump into it, I'll be grateful if you could smash that like button and subscribe to the channel. So starting with the stock price, you can see that yesterday's close, we ended up at around $142. And pre-market today, we're up slightly, so we're at $146. And if we have a look at the 5-day chart, you can see that we've had quite a significant pullback of around 25% in the last 5 days. Now, there's a few main reasons why we've seen this, but firstly, the stocks actually had a significant run up. So if you see from around November, you can see that we were trading at around $45, and then on January the 12th, we ended up at around $185. So that's almost a 300% increase in the stock price. Anytime you've got such a significant run up, it's normal and healthy to see a correction. And the second reason is Andrew left, who is the co-founder of Citron Research, and they're basically a short-selling company. And what they did is Andrew actually himself made a 7-minute video talking very negatively about Lemonade. So one of the first things he talked about was the fact that Lemonade is just like any other insurance company, which is really not. And the second thing he talked about was how Lemonade talk about giving to charity, but they don't actually give much to charity. They only give a very little amount. But in this video, I'm going to be showing you how both of these things are wrong. So starting with Daniel Schreiber. So he's the CEO and co-founder of Lemonade. The good thing about Daniel Schreiber is he really doesn't talk much, and he likes to let actions speak for himself. So the fact that he's actually tweeting and responding to this whole charity claim is, personally, I think is very normal, because anyone who's trying to attack your company, is only normal to try and fight back. So starting with the two tweets. So 22 hours ago, we don't talk much about it, but the Lemonade Foundation is a non-profit we established prior to IPO and endowed with shares worth around $75 million. The idea was that good causes will share not only in Lemonade Inc.'s give back, but also in the IPO and any stock appreciation of Lemonade. The second tweet was happy to share that Lemonade Foundation participated in Lemonade Inc.'s follow-on offering last week, taking in $16.5 million in cash, all of which will go to worthy causes. 80% of the foundation's assets are still in Lemonade stock, so hopefully there will be more to give as we grow. So there's two main points to take from these two tweets. I guess the first one is the fact that he's just completely just shown how the Citron claims about charity is BS. And the second point is how the appreciation in stock price of the Lemonade company can directly positively impact their non-profit, which is Lemonade Foundation. And the reason for this is because 80% of Lemonade Foundation's actual assets are in Lemonade stock. So the fact that the share price is increasing is actually improving their impact proportionally in terms of charity. Now moving on to Shai Winiger. So he's the co-founder of Lemonade, and this is slightly more practical news and probably more important actually. So 21 hours ago he tweeted, "We just started rolling out Lemonade Life, a term life insurance that's fully digital, requires no doctors or needles, and is actually fun to get. In the next few weeks, we will learn and iterate and then open it up for everyone." So this is extremely exciting. The actual life insurance addressable market is $800 billion. So the fact that they're getting into this is very significant for a company of their size. Now, what's even more exciting is just how quickly they have managed to expand. So just going through a few points. If we have a look, they've only been around for just under 5 years, and they've actually acquired 1 million customers in that time. Not only that, if we have a look at just the past few months, they've managed to achieve incredible things. So firstly, they've managed to launch pet insurance. Secondly, they've managed to expand operationally into France. And thirdly, now they're actually launching life insurance. I mean, the rate at which they're growing is very significant. And although this is very exciting, if we have a look at the longer term, they're really only just beginning. There's still so much more market share to gain in terms of geographically, as well as market share in terms of different sectors of the insurance business. I mean, they're only in the renters insurance, which is where they started, and then homeowners, pet insurance, and now life insurance. There's still significantly more sectors that they can go into and acquire market share as well as profit. So that's very exciting. And just looking at the website, you can see this is their term insurance, and to check out their prices, you can see it's very simple to use. It's not something that we can use in the UK at the moment, but I'll be very excited to do this once they do launch in UK, and I'm sure they will at some point very soon. The other thing I just wanted to just mention is that I really can't see anyone under the age of 35 picking any insurance company other than Lemonade. And to me, that's very exciting. The fact that they're able to acquire customers and pretty much the next generation are only going to be using Lemonade, and the fact that they're going into other insurance sectors means that once they've acquired these customers, they're going to stick around with Lemonade for the long term. And that's just extremely exciting, and it just gives me so much confidence in the future of the company. And then just finally, just going through an article from Motley Fool, just to go through some of the important points, just also to show you how Lemonade is not just any other insurance company. If we just have a look at their pricing structure, we can see that they're very different. So if we have a look here, it keeps 25% of premiums for itself. Excess claims are passed on to reinsurers, and leftover premiums are donated to the customer's charity of choice. Not only could this endear customers to Lemonade since their favorite causes benefit, but it also reduces incentive for fraudulent insurance claims. So the actual business structure is very different to any other insurance company. Because of this clear alignment with customer values, Lemonade seems poised to take market share from its larger rivals. It has already reached 1 million active customers after launching a little more than 4 years ago. And since this is a $5 trillion market, Lemonade is years away from reaching any kind of ceiling. And like I said, this is very exciting. What's even more exciting is that the insurance industry is a $5 trillion market, and there's not one insurance company out there at the moment with more than 4% share of the market. And the reason for this is because there's no disruptive innovation in insurance until Lemonade has actually come along. So again, the next paragraph is very exciting as well. So there are two particularly good reasons to be excited about Lemonade's customer growth. First, since it's a tech-driven company, it can gain operating leverage by serving a large customer base with fewer employees. So just to have a look at the numbers they've given us. So for a usual insurance company, for example, Geico, State Farm, Allstate, for every employee they have, this employee can manage about 150 to 450 customers. That might seem like a lot, but if we compare that with Lemonade, for Lemonade Insurance, for every employee they have, they can actually manage around 2,000 customers. So that just shows you the difference. I mean, less employees means less costs. Less cost means more profit. More profit means more growth. I mean, it's just a self-fulfilling cycle. Okay, so finally, I just want to finish off summarizing in terms of the stock price. So we can see that the stock price is $142 today. Now, some people might think this is expensive. Some people might think this is cheap. And the reason is because we've seen a significant run-up. And because we've seen a significant run-up, these people would think that it's very expensive to buy now. But some people might think it's cheap because we've seen a significant correction. The way I like to see the stock price is that I like to look at the longer term, because in the short term I see it a bit like a speculation, and I think that there's lots of different factors which can cause a lot of volatility in the short term. But what I like to do is I like to look 5 to 10 years down the line and think about whether the company, where the company will be in 5 to 10 years down the line. And with Lemonade, I really do see it expanding extremely fast into different markets, into different geographies and different sectors in terms of insurance. So for that reason, I really do see the stock price being significantly higher in 5 to 10 years' time. So if anything, I see this 25% pullback as a very good buying opportunity. So that's the end of the video. If you enjoyed it, I'll be grateful if you can smash that like button and subscribe to the channel. And I'd love to hear your thoughts in the comments down below. And if you found it useful in any way, please do share the video. Thank you.